A very good afternoon and welcome to the World News on Souqnews Television, live from our studio in Lagos. I am Omobola Sandra. Here are the headlines. President Tinubu highlights renewed investor confidence as a new key driver behind the strong performance of the Nigerian exchange. Nigeria Customs Service transfers 3 truckloads of seized expired pharmaceutical products to the NAFDAC. Kenya Airways has announced plans to raise at least $500 in new capital to expand and modernize its fleet. Germany's cabinet has passed a draft bill introducing voluntary military service as part of efforts to strengthen its defense capacity. India risks being banned from world football after FIFA issued a stern warning non-compliance to the World Football Governing Body rule. President Bola Tinubu has commended the impressive growth of Nigeria's capital market, attributing the surge in trading volumes and market capitalization to the success of his administration's economic reforms. In a statement released by the presidency on Wednesday morning, the president highlighted renewed investor confidence as a key driver behind the strong performance of the Nigerian exchange. Speaking during a meeting with key stakeholders in the financial sector, the president noted that the consistent upward trend in market activity is a clear indication that his policy direction is yielding positive results. He stressed that reform-driven governance remains central to sustaining economic growth and deepening investor trust. The president reaffirmed his commitment to creating a stable and transparent investment climate. He assured both domestic and foreign investors that ongoing reforms would continue to strengthen market fundamentals, encourage broader participation, and ultimately support long-term economic prosperity for Nigeria. The federal government has unveiled a digital platform aimed at tackling fraudulent practices in housing estates across Nigeria. The new portal, launched under the supervision of the Federal Ministry of Housing and Urban Development, FMHUD, allows citizens to report fraudulent activities, upload supporting evidence, and monitor the status of their complaints in real time. In a statement released on Tuesday, the ministry said the platform, accessible via reports.fmhud.gov.ng, is designed to promote transparency and accountability in the housing sector. It provides a secure, user-friendly interface for Nigerians to engage with the ministry and take active roles in curbing housing-related fraud. The initiative is part of the government's broader effort to sanitize the housing sector, protect citizens from exploitation, and strengthen public trust. The ministry urged the public to utilize the platform and assure that all complaints would be treated with confidentiality and urgency. The Lagos State government is stepping up efforts to overhaul waste management regulations with a sharp focus on construction and demolition waste, CDW. This initiative follows alarming global data showing that the construction sector contributes up to 40% of total waste generated worldwide. Experts estimate that demolition waste could reach 2.2 billion tons globally in 2025, raising urgent environmental concerns. At a stakeholder meeting organized by the Lagos State Waste Management Authority, LOMA, Commissioner for Environment and Water Resources, Mr. Tokunbo Wahab, emphasized the urgent need to address the growing volume of CDW in Lagos State. He noted that one of the key obstacles is the widespread lack of awareness regarding proper disposal and recycling methods for complex construction waste materials like ceramics, plastics, metals, and cardboard. The state government plans to enforce stricter waste regulations and invest in recycling infrastructure. Stakeholders were urged to collaborate in raising awareness, adopting sustainable building practices, and ensuring proper segregation and disposal of construction waste to safeguard Lagos' environment. The Nigeria Customs Service, NCS, Federal Operations Unit, FOU, Zone A, Ikeja, has transferred 3 truckloads of expired pharmaceutical products to the National Agency for Food and Drug Administration and Control, NAFDAC. This handover is part of the ongoing collaboration between the 2 agencies, guided by a memorandum of understanding to curb the circulation of substandard and expired drugs in Nigeria. The controller of the unit, Mohammed Shoaibu, revealed that the duty paid value, DPV, of the seized expired pharmaceuticals amounted to 3,779,500,000 naira. He emphasized the critical role interagency cooperation plays in protecting public health, noting that such seizures are essential in preventing harmful drugs from reaching consumers. During the visit, Dr. Martin Iluyomade, the new NAFDAC director in charge of enforcement and investigation, praised the Customs Service for its vigilance and commitment. He assured that NAFDAC would intensify its enforcement efforts and continue to work closely with Customs to dismantle networks responsible for the importation and distribution of expired drugs. Crude oil prices saw a modest uptick yesterday as geopolitical tensions escalated, particularly following Ukraine's drone attacks on Russian energy infrastructure. The disruption has raised concerns over global oil supply stability, reinforcing a trend of rising prices that began the previous week amid talks of potential supply cuts by major producers. Brent crude edged up by 0.07% to $67.37 per barrel from its previous close of $67.32, while the U.S. benchmark West Texas Intermediate WTI rose 0.08% to $63.71 from $63.66. Although the increases are marginal, they reflect growing anxiety in global markets over the possible tightening of supply. Between August 19 and August 23, 2025, all markets experienced notable fluctuations driven by shifting expectations around global demand and supply dynamics. Market analysts suggest that geopolitical instability, coupled with strategic supply adjustments by key oil-producing nations, could continue to influence oil prices in the near term, keeping traders and energy markets on high alert. Nigeria is experiencing a major economic boost as cocoa export revenues surged to an all-time high of 1.23 trillion naira in the first quarter of 2025. This marks a 220% increase from the 384.1 billion naira recorded in the same period of 2024. According to the second half 2025 economic outlook, the report attributes this historic growth to soaring global cocoa prices and an increase in export volumes. The sharp rise in international cocoa prices, driven by global supply shortages and strong demand, has significantly benefited Nigeria, one of Africa's leading cocoa producers. Improved local production capacity and better market access have also contributed to the surge in earnings. Analysts believe this trend positions Nigeria to expand its influence in the global cocoa market while supporting domestic economy growth. With cocoa becoming a top-performing export product, experts are calling for strategic investments in cocoa processing and value addition. Strengthening the cocoa value chain, they argue, could help Nigeria capture even greater returns and create jobs across the agricultural and manufacturing sectors. And now, young Nigerians are taking greater control of their financial future as individuals under the age of 40 now account for 82.48% of contributors under the Contributory Pension Scheme, CPS. According to a report by the National Pension Commission, PENCOM, obtained by the nation out of 105,900 993 new retirement savings account (RSA) registrations, 87,427 were from contributors below 40 years old. This growing youth participation signals a positive shift in financial awareness and long-term savings culture among the younger population. Experts say this trend reflects increasing trust in the pension system and a recognition of the importance of early retirement planning, especially among workers in the formal and informal sectors. The report also reviewed a notable rise in female participation, showing progress in gender inclusion within the scheme. With more women opening RSAs, PENCOM sees this as a step toward broader financial inclusion and empowerment, encouraging continued advocacy and policy support to sustain the momentum among young and female contributors. You are listening to the World News on Souqnews Television. More stories after the break.
Plastic waste is a mounting crisis, but it also presents an opportunity for business and government to lead the vanguard for systemic change. While regulations, corporate initiatives, and citizens' engagement have made progress, much more is needed in how businesses shape consumer behavior, how governments enforce environmental policies beyond rhetoric, and how public perception is managed through strategic communication. For decades, Nigeria's reliance on single-use plastic sachets, bags, and food packaging has grown, driven by affordability and convenience. However, this has come with a cost. The country generates an estimated 2.5 million tons of plastic wastes annually, with only about 12% recycled. In urban centers like Lagos, Abuja, Ibadan, Port Harcourt, waste is a leading contributor to clogged drainage systems, flooding, and environmental degradation. In this special report, Bayo Olaoye examines the challenges facing efforts to tackle the menace of plastic wastes in the country. Despite past government efforts to curb indiscriminate plastic use, such as Lagos environmental sanitation laws under former Governor Babatunde Fashola, enforcement has been inconsistent. The challenge now is moving beyond periodic government crackdowns and isolated corporate initiatives to a coordinated long-term shift towards a responsible plastic use, recycling, and waste management. Leading Nigerian manufacturing companies are taking active steps to integrate recycling and responsible disposal into their operations. Key initiatives include investing in recycling hubs, with Coca-Cola of Nigeria, Nestle, and Guinness setting up plastic recovery and recycling hubs, creating an ecosystem where post-consumer waste is collected, processed, and refused. Retailers and distributors are being encouraged and in some cases incentivized to set up collection points where consumers can return used packaging for responsible disposal. There is also brand-driven consumer education. Organizations have introduced citizen advocacy campaigns to influence individual waste disposal behavior. This kind of messaging, when amplified by large brands, can have a ripple effect in shifting cultural habits. Beyond environmental responsibility, investing in circular economy models enhances long-term profitability, strengthens brand equity, and aligns with global environmental, social, and governance standards. To effectively shape consumer behavior and stakeholders' engagement, businesses must leverage communication strategies that go beyond compliance reports. Employees should be active participants in sustainability efforts. Companies can integrate sustainability training, incentivize waste reduction, and implement office-wide plastic reduction policies, engaging suppliers, investors, and partners in sustainability commitments such as reducing excessive packaging or co-investing in recycling solutions to create an ecosystem-wide impact. Mass communication campaigns, social influencers, partnerships, and media collaborations can help educate consumers on practical steps for responsible plastic use and disposal. While Nigeria has engaged in international climate and sustainability conversations, the government must go beyond policy declarations and foreign aid incentives. The priority should be local, long-term economic and health benefit, rather than reactivate bans that are often poorly enforced. The government can provide tax incentives for businesses, investing in recycling infrastructure while enforcing stricter regulations on reduction and disposal, expanding waste management facilities, establishing more government-led recycling centers, and integrating waste picker into a formalized economy can improve efficiency and create jobs. The administration of Governor Babatunde Fashola demonstrated that when the government takes waste disposal seriously with clear penalties for violations, citizens pay attention. The government must invest and consistently engage public education on the economic and health impact of plastic waste. A cleaner environment leads to a lower public health costs, fewer disease outbreaks, and increased workers' productivity due to better air quality and more usable public spaces. The Nigerian plastic waste problem is not just an environmental issue. It is an economic and reputational challenge for businesses and a government issue for policymakers. By adopting strategic communications, businesses can shift consumer behavior, governments can enhance enforcement, and citizens can embrace a cleaner and more sustainable future.
Welcome back. Kenya Airways has announced plans to raise at least $500 million in new capital to expand and modernize its fleet, with the process expected to be finalized by the first quarter of 2026. The airline, one of Africa's leading carriers, said the capital injection will focus on acquiring new aircraft and restoring grounded planes, ensuring greater efficiency and improved service delivery. Chief Executive Officer Alan Kalivuka confirmed that 3 Dreamliner aircraft had been undergoing maintenance, with one already returned to service in July. He emphasized that the airline is working towards achieving full fleet availability by next year, a move expected to boost passenger numbers, strengthen revenues, and reinforce the company's regional market position. Despite reporting a pre-tax loss of 12.17 billion shillings in the first half of 2025, the airline remains optimistic about recovery, pointing to recent profitability in 2024 and government-backed financial restructuring. With a planned capital raise and expanding fleet, Kenya Airways is positioning itself to capture growing travel demand across Africa and beyond, aiming to rebuild momentum and secure long-term sustainability. Zimbabwe has reintroduced a ban on maize imports following a strong harvest that has restored national grain reserves and ensured supply for millers. According to the Ministry of Agriculture, improved rainfall and robust state support schemes, including the smallholder program, boosted output significantly after last year's El Nino-induced drought left the country dependent on imported grain. The government said the new policy is aimed at safeguarding local farmers and stabilizing domestic markets. The country, which consumes about 1.8 million metric tons of maize annually, managed to recover from a steep decline in production that dropped to 800,000 metric tons last season. This year's harvest has provided enough stocks to meet local demand, reversing a reliance on costly foreign imports. In previous years, Zimbabwe spent hundreds of millions of dollars importing maize, straining its foreign currency reserves. The government has emphasized that protecting local farmers remains a top priority to strengthen food security and reduce external dependency. Analysts, however, note that while the surplus marks an important milestone, the agriculture sector still faces risk from drought and other climate-induced shocks. To address long-term challenges, the government is encouraging diversification into drought-tolerant crops such as sorghum and millet. The Bank of Japan's latest bond buying operations have revealed unusual signs of distress in Japan's government debt market as investors rush to offload holdings even at a discount. At the central bank's scheduled purchases on August 14th and August 20th, the lowest accepted yield matched the average yield, an indication that sellers were unusually eager to exit their positions. The development highlights the pressure building in Japan's bond market after years of heavy central bank intervention. Investors appear increasingly willing to reduce exposure, raising concerns over liquidity and long-term sustainability of Japan's massive debt program. Analysts suggest this trend could reflect growing uncertainty about the board's policy trajectory and the durability of ultra-low interest rates. The signal from the August operations add to mounting speculation that the board may face greater difficulty managing bond supply and investor sentiment going forward. Market participants are closely watching upcoming operations for further evidence of whether this shift is temporary or the beginning of broader sell-off of Japanese government bonds. Meanwhile, Thailand has announced a policy shift granting legal employment rights to about 80,000 Myanmar refugees who have lived in border camps for decades. The government said 42,601 of them are of working age, and the decision is expected to ease reliance on humanitarian aid while boosting local economies. The United Nations Refugee Agency hailed the move as a strategic investment that would unlock refugee potential and expand economic resilience. The announcement comes as Thailand grapples with migrant labor shortage following armed conflict with Cambodia, which led to an exodus of workers. Official data show that before the conflict, 520,000 Cambodians, about 12% of the total workforce, were employed in Thailand. The country currently employs nearly 3 million Myanmar workers, primarily in construction, agriculture, and services. Refugee inclusion is expected to fill critical gaps in these sectors. Government officials said the cabinet backed the Labour Ministry's proposal to extend employment rights, noting that it will bolster the economy and spur domestic demand. The United Nations emphasized that enabling refugees to work legally benefits not only the displaced families, but also host communities, creating long-term growth. The policy, it added, could serve as a global example amid declining international aid for displaced populations. Chinese stocks have surged to decade highs, lifted by strong support from state-backed institutions and large domestic investors, even as retail traders remain cautious about re-entering the market. The rally has defied concerns over China's uneven economic recovery, with the Shanghai Composite Index gaining nearly 25% since April. Analysts point to relatively low valuations, rising allocations from insurers, mutual funds, and exchange-traded funds, and higher yields compared to government bonds as drivers of the market momentum. Newly registered private securities funds also signal growing interest from high net worth investors, further strengthening local participation. Despite the momentum, retail investors and foreign institutions have yet to commit heavily to Chinese onshore equities. Data shows new individual stock account openings remained muted, while overseas holdings have not significantly increased, suggesting there is still substantial capital sitting on the sidelines that could fuel further growth if confidence improves. South Korea and the United States have agreed to expand cooperation in nuclear energy, Seoul's foreign ministry announced on Wednesday. The decision followed a meeting between South Korea's Vice Foreign Minister Kim Jin-ah and United States Deputy Secretary of Energy James Danley in Seoul. Officials say the discussions built on agreements reached during the recent summit between South Korea President Lee Jae-myung and United States President Donald Trump, where nuclear cooperation was identified as a priority. The strengthened partnership is aimed at advancing joint projects, expanding technology exchange, and supporting energy security for both nations. South Korea has been working to expand its nuclear energy capacity to meet rising domestic power demand and reduce reliance on fossil fuels, while the United States has sought to reinforce its global influence in the nuclear sector. Both countries describe the talks as meaningful and aligned with broader strategic energy goals. Analysts noted that deeper nuclear cooperation between the two allies could enhance competitiveness in global reactor exports, while also supporting clean energy transitions. The partnership is expected to focus on next-generation reactor development, fuel supply chains, and nuclear safety standards. Industry experts say the move highlights a growing trend of energy diplomacy as countries seek stronger alliances to secure long-term energy stability. In India, which saved an estimated $17 billion by importing discounted Russian oil since 2022, now faces new trade pressure after the United States introduced tariffs of up to 50% on Indian exports. The tariffs could affect about $37 billion worth of goods, especially in textiles, gems, and jewelry. While this creates short-term strain on India's export sector, New Delhi is focusing on protecting jobs, securing alternative markets, and expanding its energy cooperation with Washington, while maintaining stable oil flows from Russia. Russian oil currently accounts for about 40% of India's total crude supply, making it a central factor in the country's energy security. Analysts warn that if India were to halt these purchases abruptly, global crude prices could surge to $200 per barrel. For that reason, Indian officials have emphasized that decisions will be guided by affordability and price stability, not political pressure. Alongside this, Prime Minister Narendra Modi has pledged domestic measures such as reducing the goods and services tax to stimulate demand and safeguard farmers and labor-intensive industries ahead of regional elections. Diplomatically, India is widening its options with upcoming talks with the United States on energy and critical minerals, continued engagement with Russia on oil and defense, and a planned visit to China for the Shanghai Cooperation Organization Summit. Observers believe these efforts signal New Delhi's strategy to balance major global partners while reinforcing its sovereignty. Trade experts say that although the tariffs pose immediate challenges, India's diversification and reforms could ultimately strengthen its economy and enhance resilience in global markets. This is the World News on Souqnews Television. We'll be right back.
Muhammad Yunus was born on the 28th of June 1940 in the village of Batwa, Chittagong, a British Indian colony which is currently known as Bangladesh. He attended Lama Bazaar Primary and Secondary School in his village and passed the matriculation examination into Chittagong Collegiate School, where he ranked 16th out of 39,000 students. After his graduation in 1961, Yunus joined the Bureau of Economics as a research assistant and was later appointed lecturer of economics at the Chittagong College. During that time, he also set up a profitable packaging factory on the side. In 1965, he received a Fulbright scholarship to study in the United States, where he obtained his PhD in economics from the Vanderbilt University Graduate Program in Economic Development. Between 1969 and 1972, after his keen education excellence of apex heights and proportions in the United States, he returned home and was appointed professor of economics at the University of Chittagong. He was eventually appointed until served for 33 years. When Bangladesh suffered a famine in 1974, Yunus felt he had to do something for the very poor. In his country, he founded the Grameen Bank. His motivation was to create economic and social development for the very poor, giving long-term loans to those who wanted to start small enterprises to pay back when they can. The aim to help was to get many of them out of poverty. For this, he was awarded the Nobel Peace Prize in 2006. Muhammad Yunus is a recipient of numerous international awards for his ideas and endeavors, including the Humanitarian Award in 1993, World Food Prize in 1994, Independence Day Award in 1987, Bangladesh's highest award, the King Hussein Humanitarian Leadership Award in 2000. He was also awarded the Volvo Environment Prize in 2003, Nikkei Asia Prize for Regional Growth in 2004, Franklin D. Roosevelt Freedom Award in 2006, as well as the Seoul Peace Prize in the same year. All humans are born entrepreneurs, he would always fondly say. His heart showed through his everyday life.
Welcome back. Germany's cabinet has passed a draft bill introducing voluntary military service as part of efforts to strengthen its defense capacity amid Russian security threats. The 6-month voluntary program is designed to double the number of trained reservists from about 100,000, while also creating a pathway for recruits to pursue permanent service. Defense Minister Boris Pistorius emphasized that the Bundeswehr must expand to meet new North Atlantic Treaty Organization force requirements. The proposal aims to increase the number of active soldiers from 180,000 to 260,000 by the early 2030s, with annual recruitment targets beginning at 20,000 in 2026 and rising to 38,000 in 2030. Failure to meet these targets could lead to the reinstatement of compulsory military service, a practice abolished in 2011. Under the draft, all young men must be required to complete an online questionnaire on their willingness and suitability for service. While the government hopes voluntary service will attract recruits, debate continues within Parliament. Critics from Chancellor Frederick Merz' Conservative bloc argue that reinstating conscription should occur automatically if targets are missed, while members of the Social Democratic Party insist on prioritizing efforts to make military service more appealing. Despite political divisions, the Bundeswehr has already reported a 28% rise in recruits this year, marking its strongest surge in years. The United States dollar recovered on Wednesday, easing market concerns of a Federal Reserve independence, while European stocks steadied after Tuesday's sharp French-led sell-off. Investors shifted attention to NVIDIA's earnings report, seen as pivotal for tech-driven equity markets, trading near record highs. The dollar index rose 0.4% by mid-morning London trade, with U.S. bond yields stabilizing after recent swings. Uncertainty deepened after President Donald Trump ordered the firing of Federal Reserve Governor Lisa Cook, a move now facing legal challenge. Traders fear political pressure could erode central bank independence, though markets remain focused on the likelihood of a September interest rate cut. Federal Chair Jerome Powell's comments on Jackson Hole reinforced expectations of policy easing, with futures pricing on 84% chance of a rate cut next month. In Europe, the stock 600 steadied following steep losses tied to French political turmoil. Prime Minister Francois Bayrou's failed bid for support on a debt reduction plan unsettled markets, but eased as investors' better budget deal would still pass. Meanwhile, oil prices slipped 0.4% and gold edged lower, while Asian markets diverged, with Chinese equities at 3-year highs, even as Japanese bond yields hit fresh records. All eyes now turn to NVIDIA, where traders are bracing for a potential $260 billion market swing. And now investors are on edge better after President Donald Trump's administration struck a controversial deal that converts $11.1 billion in government support for Intel into a 9.9% equity stake in the company. The move announced just days after Trump publicly pressured Intel CEO Lip-Bu Tan to resign. It's being seen by some as a dangerous precedent for government interference in private industry. The arrangement, part of Trump's expanded use of the CHIPS Act, dilutes existing shareholders and reduces their voting rights. While the U.S. Commerce Department will not take board seats, it retains the right to vote freely on major matters, raising concerns of blurred lines between corporate and national interests. Critics warn that the deal may trigger conflicts over decisions ranging from plant locations to layoffs, and could deter foreign investors wary of political meddling. Market reaction has been fixed. Intel stock, which climbed following Trump's pressure campaign, slipped 1% to close at $24.35 on Tuesday. Fitch Ratings said the deal improves liquidity but does not alter Intel's weak BBB credit rating. Meanwhile, institutional investors and shareholders activists fear the step edges the U.S. towards state capitalism, a model long practiced in Europe and Asia, but unusual for Washington outside financial crisis. The United States Transportation Department has announced plans to assume management control of Washington Union Station, one of the nation's busiest rail hubs, citing the need for enhanced safety and modernization. The move follows President Donald Trump's decision earlier this year to reshape leadership at Amtrak and increase the federal security presence in the capital. Transportation Secretary Sean Duffy confirmed that formal action will be taken in September after a negotiating agreement with the Union Station Redevelopment Corporation and Amtrak. The takeover comes at a time of significant upgrades in the American rail sector. Amtrak is preparing to launch new Acela high-speed trains along the Northeast Corridor, linking Boston, New York, Philadelphia, and Washington, a region that accounts for 1/5 of the U.S. economy. The new trains, built by Alstom in the United States, will provide 27% more seating capacity and run at speeds of up to 160 miles per hour, boosting passenger experience and regional connectivity. Federal officials say the Union Station transition will align with wider infrastructure reforms, including the recent reassignment of the Penn Station reconstruction project in New York to Amtrak and the Transportation Department. The administration maintains that the combination of increased investment, modern equipment, and closer federal oversight will strengthen public safety, reduce delays, and secure Union Station's role as a central gateway in America's rail network. India risks being banned from the world football for the second time in 3 years after FIFA and the Asian Football Confederation, AFC, jointly issued a stern warning to the All India Football Federation, AIF. The global and continental football bodies have given India until October 30 to finalize and adopt a new football constitution or face possible suspension. In a joint letter addressed to AIF President Kalyan Chobe, FIFA and the AFC expressed profound concern over the prolonged delay in implementing necessary governance reforms. The letter, seen by AFP, warned that failure to meet the deadline would leave them no choice but to escalate the matter to FIFA's decision-making body. The looming threat of suspension would not only affect India's participation in international competitions, but also block access to funding and development programs. Football stakeholders in India are now under pressure to act swiftly and ensure compliance to avoid another damaging fallout for the sport in the country. That's a wrap on the news, but before we go, here's a recap of the top stories. President Tinubu highlights renewed investor confidence as a key driver beyond the strong performance of the Nigerian exchange. Nigeria Customs Service transfers 3 truckloads of seized expired pharmaceutical products to NAFDAC. Kenya Airways has announced plans to raise at least $500 in new capital to expand and modernize its fleet. Germany's cabinet has passed a draft bill introducing voluntary military service as part of efforts to strengthen its defense capacity. India risks being banned from world football after FIFA issued a stern warning non-compliance to the World Football Governing Body rule. Many thanks for watching. Please do well to follow us on all our social platforms at Souqnews Television. I am Omobola Sandra. Have a good afternoon.